Rick Santelli is standing by at the CME. Hey, Rick.
Yes, good morning, Becky. Initial jobless claims, continuing claims hitting the wire. 12 weeks in a row above 1.8 million. We'll do continuing claims first. 1,868,000, very close to expectations. Last week was subtly revised from 1.863 million to 1.855. As I said, 12 consecutive weeks. Initial claims, 231,000, very close to expectations, and that is 2,000 less than a slightly revised 233,000. And if you continue to monitor these claims, it's been a while. 250,000 was a high watermark last week in July, and they have been on the low side since. In the 230s, we even had a 228. That was in the second week of August. And all these numbers, as Becky pointed out, continue to drive the notion that it's still a split decision on exactly how weak the labor market is getting. Now, let's turn towards GDP, a revision to the upside. Second quarter, second peak, moves from 2.8 on GDP to 3%. 3%. And just to put a face on that, the last quarter of 23 was 3.4. That's where we're comping to on the strength. Consumption also upgraded rather dramatically, 2.9% versus 2.3. 2.9 also comps the last quarter of 23 when it was 3.3. Price index moves up as well to 2.5 from 2.3, and that comps to the first quarter of this year when it was 3.1%. And finally, if we look at the core PCE index quarter over quarter, it's the only metric here that came in on the light side. 2.8 versus 2.9. And, of course, the recent high watermark was 3.7 in the first quarter of this year. You see yields moving up on this data, whether it was initial claims or the rather strong revisions on the GDP. And I do point out the price index moved up. Core didn't, but it's still much closer to 3%. Real quickly, let's look at some other metrics out there. If we look at inventories, wholesale inventories built up 0.3 as expected. Retail inventories, however, much stronger, up 0.8%. And in the rearview mirror, we have 0.7. So nice strength building there. And last but not least, on the trade deficit, which is a trade balance, the balance is a deficit. This is well worse than we were expecting. Look at a number for minus 97, minus 98, minus 102, minus 102.7 billion. That is the worst level going back to May of 22, and it does underscore the notion that the rest of the world we need to pay very close attention to because, indeed, we are definitely consuming a lot more than we are exporting on that trade balance. Interest rates really popped up on that. We're at 3.86 in a 10-year. That's up about 3.5 basis points. A 2-year note yield, well, now it's at 388, but prior to that, it was hovering at the lowest level, should have closed around 383, 384 since May of last year. Becky, lots of data, lots of market movement. Pre-opening equity futures are even doing better on this because there's nothing wrong with a little
50 or 60
growth.
points. Yeah, or actually exactly. 35, 40 points maybe for the Dow. Rick, I was just going to say thank you for that Lollapalooza of information. Nobody does it better with getting that many numbers. My head's spinning just trying to follow the whole thing.